Welcome to Woods of Stardom. This is CH. I will be covering the Fundstrat GRNY Shorts US Large Cap ETF with the ticker GRNY in this video, which is part of my Absolutely Biased Comments or ABCs series. The aim of this series is to cover one fund per video to share how an individual investor can try to find out more about a fund from public sources and do some basic research or simple due diligence on the fund before deciding to buy the fund or walk away. Some quick disclaimers before we start. This is not a product sales pitch or a recommendation to buy. I'm not sponsored by anyone to do this video. Please do your own research and be clear about the product features and risks before taking any action. This video is done as a follow-up request from a viewer's comment in my previous video covering the Amundi Index MSCI Emerging Markets Fund. I did comment that this product has a pretty short track record back then. The product, however, looks interesting, so I think I can still cover the investment strategy and portfolio construct while putting less focus on performance in this video. If you would like me to cover any funds or ETFs, do drop me a comment in any of my videos, and I'll be happy to work on it as long as I can find enough information on the product. Fundstrat is an independent boutique research firm co-founded in 2014 by Tom Lee, who was previously the chief equity strategist at JP Morgan. Fundstrat initially focused on institutional clients and provided macro research through an evidence-based data-driven approach, as well as being one of the early providers of crypto research. In 2019, Fundstrat decided to expand its research offerings to a wider client group and launch FS Insight, a research web portal made available to advisors and retail clients. Among the different research categories, one of them is called GRNY Shorts, that represented Tom's list of companies poised to benefit from multiple macroeconomic tailwinds. With increasing popularity on the GRNY Shorts list and gradual maturity of the business over the years, Fundstrat decided to set up a proper asset management company called Fundstrat Capital and launch its first product in 2024, that is the Fundstrat GRNY Shorts US Large Cap ETF with the ticker GRNY that is covered in this video. While Fundstrat Capital launched two more ETFs in 2025, their AUMs are very small with less than $100 billion each. GRNY at over $3.7 billion of AUM, therefore currently is the flagship product and represents almost the whole AUM of the firm. The Fundstrat GRNY Shorts US Large Cap ETF is an actively managed exchange-traded fund or ETF that is listed on the New York Stock Exchange or NYSE with the ticker GRNY. The ETF actually has an investment advisor and an investment sub-advisor. Fundstrat Capital is the investment sub-advisor and is responsible for the day-to-day management of the ETF portfolio, including giving instructions on the specific buy and sell trades and adjustments in the portfolio. The investment advisor is Tidal Investments, who is a full-service ETF platform provider. Tidal provides overall responsibility for the general management and administration of the ETF, such as receiving and following the instructions from Fundstrat Capital to execute and process the buy and sell trades and adjustments in the portfolio. Tidal also covers all the administrative and operational aspects, including custody, fund administration, transfers, fee handling, price and NAV calculations, and so on. This is a common arrangement especially for boutique investment firms like Fundstrat Capital that doesn't have the capability and resources to handle the operational aspects of the investment product, and therefore outsources it to another company dedicated in this area of work. From a legal perspective, investors are therefore investing in an ETF created by Tidal instead of Fundstrat Capital. The Fundstrat GRNY Shorts US Large Cap ETF lists 4 portfolio managers in the fund webpage and fact sheet. Tiao and Ben are however from Tidal Investments and therefore are less important for investors in terms of understanding the people managing the actual portfolio. Tom, as mentioned earlier, is the co-founder of Fundstrat. With Fundstrat Capital, he serves as the Chief Investment Officer and is also the lead portfolio manager for the ETF. There is a much longer bio of Tom in the fund website for those who are interested to find out more about him. Tom is supported by Ken, who is the co-portfolio manager and also the head of data science in the firm. As per his bio, Kent takes the important task of managing and optimizing the proprietary portfolio and quantitative models used for the portfolio construction and stock selection in the ETF. The Fundstrat GRNY Shorts US Large Cap ETF has a straightforward investment objective, that is to seek long-term capital appreciation via an actively managed portfolio. The investment universe, as per stated in the ETF name, is US large cap equities, defined as the top 85% of the US equity market by market cap. This translates to stocks with more than 24.2 billion US dollars of market cap as of end September 2025. The term granny shorts came from basketball and refers to an unconventional underhand free throw style. It doesn't look cool, but it's actually highly accurate when mastered, as per evidence by NBA player Rick Barry, who had the highest 90% free throw accuracy at the time of his retirement in 1980. I suppose Tom is a big fan of NBA and wanted to use the term to refer to his unconventional investment approach that can potentially deliver better returns than the market. The ETF does provide quite a lot of details on its investment strategy and process, but is scattered across different places. The fact sheet, for example, gives a nice summary of the investment approach as shown here, where we earlier got the ETF's definition of US large cap. More importantly, there is a pretty clear description of the investment process. The ETF identifies 5 to 10 investment teams through macro research, which is the main capability of Fundstrat. Top-down fundamental analysis is then done to identify companies that can benefit from the teams. This follows with quantitative screening to pick the more suitable companies with the appropriate timing to add into the portfolio. And there is a specific criteria that a stock must appear in 2 or more teams to be selected. The resulting portfolio will have 20 to 50 positions of equal weighting. I think having a clear description of the investment process like this in the fact sheet helps investors understand the product effectively. A more detailed version of the investment process is found in the prospectus, that further elaborates, for example, on the factors used to determine investment teams, as well as more information on the top-down fundamental analysis of the stocks. Additional details of the quantitative screening process is also provided in the prospectus. There is also a mention of the ETF using keyword frequency analysis to help identify teams, which is a machine-assisted approach that is getting popular these days. It is also mentioned here that the ETF can invest up to 20% outside of large-cap US stocks. The ETF webpage, on the other hand, provides a shorter investment process description, although it adds that the portfolio is rebalanced quarterly. More useful is a picture that clearly shows the different teams currently adopted by the ETF, that is split between shorter-term teams and longer-term teams, and as well as all the positions in the portfolio and which teams each position belongs to. This is probably the most elaborate portfolio data relating to investment process that I have come across so far. Last but not least, Fundstrat Capital provides a comprehensive investor deck document that can be downloaded from its website by anyone, which is an uncommon practice as most fund providers create and distribute such documents only to their distributors or select clients. I therefore think that the availability of this investment deck is really good for all investors. Besides the company introduction and portfolio details of the ETFs, the investment deck provides a flowchart version of the investment process. From here, it provides some additional information that is not found in the other sources. For example, there are a lot more details given here on the macro data and economic indicators and market statistics used in the market analysis phase. This follows with some additional details in the identification of the teams in the portfolio. And finally, the portfolio construction phase that we went through earlier, also presented in an easy to understand flowchart version. Again, I really like the amount of details provided for investors to understand the product. And hopefully, we can see more fund providers do the same in the future. The Fundstrat GRNY Shorts US Large Cap ETF was incepted only about a year ago in November 2024, but has already gathered over 3.7 billion US dollars of assets, which is very impressive. I suppose a sizable chunk of the assets come from long-term supporters of the research services provided by Fundstrat in the past decade. The ETF fact sheet provides the typical sector allocation and top 10 holdings, similar to most mutual funds and ETFs. The portfolio currently has 39 holdings, and as such, we would expect each holding to have an equal weight of around 2.56%. The weights will then change due to individual stock price movements and get rebalanced quarterly. While we would typically say we should put the biggest bets in the highest convictions, this is already a concentrated portfolio of high convictions. So I think equal weighting with quarterly rebalancing helps to reduce single position risk. While the ETF runs a rather concentrated portfolio, it is actually not significantly different from the S&P 500 index in terms of sector allocation. Notable differences include higher financials and industrials, as well as an absence of healthcare, energy, real estate, and materials in the ETF. These differences would be a result of the themes identified and followed by the portfolio. Morningstar gives a bit more color on the ETF portfolio. Factor-wise, the portfolio looks to be very high growth and high momentum tilted, while quality factor has a wider range. Given the growth bias, yield factor is very low, and volatility is pretty high. Financial measurements are more mixed compared to Morningstar category average, with the ETF having notably lower price-to-book ratio and higher cash flow growth. The ETF webpage has instead the full holdings plus this picture of the different teams and their associated holdings. From here, we can see that there are currently 3 short-term teams and 4 long-term teams identified. And for each team, the investment process has shortlisted 28 to 49 stocks. The eventual selected stocks are much smaller than the shortlisted universe though, with the Style Tilt team having the most number of stocks at 27, and the Energy/Cyber Security team having the least at 6. Also useful to see in this picture is that there are several stocks associated with more than 2 teams. For example, Google, Meta, and Caterpillar are each associated with 5 teams, suggesting that these companies are most aligned to the macro research views of Fundstrat at the moment. While the ETF webpage provides a brief description on the investment teams, they are elaborated in the investment deck document. There is a clear description for each investment team provided, as well as additional slides to further elaborate the thought process behind the teams. While these are mostly in graphs and charts formats, and therefore better used by investment professionals as presentation aid, individual investors who have some financial knowledge should be able to grasp the meaning of these slides and understand the rationale behind the teams by themselves. Let's take a look at the holdings differences between GRNY and the Spider S&P 500 ETF or SPY, which is the most popular US large cap equity ETF in the market. Out of the 39 holdings in GRNY, Sophie Technologies and MicroStrategy are not in SPY. The remaining 37 holdings comprise of about 45.3% in SPY, though the weights are very different. Except for Berkshire Hathaway, the rest of the top 10 holdings in SPY are also covered in GRNY. Therefore, from a holdings exposure perspective, GRNY still gives investors the leading mega tech exposures, and beyond that, the rest are select exposures mostly in SPY, but dependent on the macro views of Fundstrat. Tom, the lead portfolio manager, also is very active on giving weekly updates via YouTube, So this is a good way for investors to be in touch with the latest changes in the portfolio. This is again rather uncommon for fund managers to be so transparent and so vocal, and I hope more fund providers can do the same in the future. Similar to most US listed ETFs, the Fundstrat GRNY Shorts US Large Cap ETF is available in only one share class that is traded in US dollars. The ETF has a total expense ratio or TER of 0.75%. That looks pretty high even for active ETFs, and is quite similar to the TER of institutional share classes of equity mutual funds. High fees are not a bad thing if the product can generate high returns, so the performance of the ETF would have to justify the fees, which we will see in a while. The fact sheet states that the ETF has a quarterly distribution frequency. However, I can't seem to find any distribution payout information anywhere, including Morningstar, so I am assuming the ETF hasn't paid out any distributions so far since inception. The ETF has been trading very close to its NAV since inception, well within a plus minus 0.3% range and at a very slight premium most of the time. This is good for investors as there is a high certainty of trading the ETF near to its actual value. The Fundstrat GRNY Shorts US Large Cap ETF provides performance data across some time periods in its webpage, though it is not updated daily. Based on the data, it looks like the ETF has managed to outperform S&P 500 index comfortably for the 1 year worth of track record. Let's see if we can find out more using Morningstar. Since inception in November 2024, GRNY has delivered 25.4% returns, while SPY had 17.11% returns. We can see from the performance lines that GRNY has a slightly higher volatility, as seen in the larger drawdowns in February to April this year, as well as the larger rebound after that. This is expected for a more concentrated growth-focused portfolio. That being said, given Morningstar shows that GRNY has the highest factors in growth and momentum, I have added here IWF and MTUM for comparisons. It is nice to see that GRNY has managed to outperform all these ETFs, mainly attributed to the strong rebound from the lows in April. This also shows that despite having a relatively high TER of 0.75%, GRNY has managed to deliver a better net return and therefore make the fees worthwhile. GRNY has only slightly over 1 year worth of track record, so it is definitely too short to derive any conclusions. The slightly higher volatility and drawdown may also be a concern if the markets turn bearish. However, the performance so far definitely looks very promising for investors looking for a more punchy version of US large cap solutions. With that, let's summarize our findings. Fundstrat Capital is a new boutique fund provider focusing on US equity markets, but is established based on a decade-long of research capabilities from the parent Fundstrat company. Tom Lee, co-founder of the research firm and CIO of Fundstrat Capital and lead portfolio manager of the ETF, is definitely the main reason for investors looking at this ETF. While there is clearly key man risk involved here, supporters of Tom since his days as chief equity strategist in JP Morgan and the past decade of research services through Fundstrat will consider this ETF as an easy way to invest in Tom's investment views and stock preferences. The Fundstrat GRNY Shorts US Large Cap ETF is a concentrated thematic US large cap growth focused portfolio based on macro research and quantitative stock selection. The investment process are rather clearly elaborated through the ETF webpage and various documents, which is good for investors. This is one of the few fund providers that provide a detailed investor deck publicly. The deck is immensely useful as it provides enough information for most investors to understand the investment process and the portfolio construct. As with most US listed ETFs, GRNY is only available in one US dollar share class. While the ETF is supposed to have quarterly distributions, it doesn't seem to have paid out any distributions so far. The ETF has delivered a strong performance since incepting in November 2024, comfortably outperforming S&P 500 index. The performance does come with slightly higher volatility and drawdown though, as expected of a concentrated portfolio. With only about a year of track record, it is also insufficient to conclude that the ETF can consistently deliver good performance over time. In conclusion, GRNY is a relatively new but very interesting US large cap solution that is worth observing going forward. Investors who are already familiar with Tom and like his research capabilities should be no stranger to the investment rationale and process behind this ETF, and therefore be more than willing to consider it. Given its concentrated portfolio and short track record, I think this ETF for now would be more suitable as a satellite or tactical allocation instead of a large core allocation in a portfolio. This concludes my absolutely biased comments on the Fundstrat GRNY Shorts US Large Cap ETF or GRNY, and I hope it will help in your investment journey. May we all grow wiser and prosper.